So, yet another Friday evening session. This is 11th of September 2020, 9 p.m. Friday. We are end of our week. Membership traders, good evening. Like always, let's talk about the markets. Let's talk about the sectors. And later on, we'll take up your doubts and questions. You have the 75-minute Nifty futures chart in front of you, but I generally prefer to do a top-down approach, starting off with the weekly, daily, and then the intraday. I'm going to use trading view today with the three river system, with the river acting as our trend decider. I have hidden the banks and the mainland because it makes the candles squeezed out a little bit, it makes them smaller. So this is the weekly chart in front of you. Exceptional run that we had recently, pretty good. We have a bearish engulfing last week, which has led to a bit of correction this week and a bounce back. So overall, the market has been stretched, and I have created this very wide falling channel. Going forward, the index needs to take out this channel. Let me just change the color of this. Yeah. So going forward, the index needs to take out the channel on the upside. It may act as a good source of support later, and then inch towards life highs. Whether this channel will provide any value to us or not later on, that needs to be seen. But this is one falling channel that I have received from the weekly chart based on the RSI and the bar counts. This is the big, wide, long-term channel. Whether it's play out or not, we will see. But looking at the weekly charts, we had a great run. It has straight away moved outside the river. It has moved into an uptrend. Generally, when there is a trend reversal from a downtrend to an uptrend, going up back to the other side of the river, generally we see the prices dipping back within the river. And this zone should act as a zone of support for any further bounce backs. This is what the weekly chart suggests. One should continue their bullish stance. If we now go back one time frame lower to the daily chart, the daily chart has been in an uptrend for quite some time. And what I was telling you right now is the fact that every time you notice an uptrend reversal, every time prices comes down within the river, it tends to give a bounce back, and that has been the case, and this is a sign of a good uptrend. However, this time we have one bar which has fallen outside the river, just one bar, which is all right, which is not a problem. But the issue is this rising channel. If you look at this channel, yes, this is the rising channel which has been holding the lows since the mid-July. And right now, prices have broken below that, and it's staying well below that for almost 6 bars now. If you recall last Friday's session, we've been talking about the channel breakdown. The channel is under threat. The prices will try and bounce back. This is a channel on the daily time frame, and I feel that prices will try and come close to this 11,600 mark, and it will try its best to get itself back to within the channel. If that does not happen, and if you see any signs of weakness, then the next leg of selling comes in. That needs to be seen again next week. But these are the possibilities that we need to work on, the anticipation based on which we will be placing our trades. In terms of trend, looking at the daily chart, I would say it's a flattish trend. It's neither bearish nor that greatly bullish. When you bring in the other Bollinger Bands of the mainland and the banks, you can clearly see it is a pinch and a squeeze in the making. You can see that the width of the river has come down significantly. That is a squeeze. You can see that the banks are approaching each other. That's a pinch with the 2 standard deviation. And you can see the mainland lines are also approaching each other, which is another pinch with the 3 standard deviation. When you combine all of these 3 aspects, what we understand technically is the market is getting contracted. So brace yourself for a breakout. Brace yourself for 1 or 2 days of really long sell-offs or really long breakouts. Volatility indicators do not give us direction of price. That is to be seen later. But we should brace ourselves for some big move, either next week or next to next week. Because when markets contract, they can contract for extended period of time. Just because it is contracting now does not mean it's going to break out tomorrow. But as traders, we should be keeping a close watch out for a couple of long candles is the right way to say it. Now going one time frame lower. So the weekly chart is still positive. It is extended and it can come down a little bit. One should stay from a medium to long term perspective bullish. From the daily time frame, it's essentially going nowhere. It's trying to bounce back after the breakdown and the prices are getting contracted. So it's going to give us some sharp move. So unbiased. Now let's go to the 75-minute time frame. Now as I come down to the 75-minute time frame, I see that thanks to the recent bounce back in the market the last 2 days, the short term or the 75-minute time frame trend has reversed from down to up. Prices have gone on the other side of the river. And a meaningful channel that I can draw on the 75-minute time frame is this one. The market has also given a breakout. So the shorter time frame has put in some strength. It can consolidate a little bit and then it will try and go further. I expect that the index will try and come to these kind of levels, which will essentially take the RSI back to close to the overbought levels of 70-80 zone. And then this is where the price might try and find some resistance. This is all my anticipation. There's no hard and fast rule. It has to come true. But if it comes true and if it goes towards 11,600, then I'll be closely watching to book out some profits from the long trades and looking for some contra short, if at all. And the reason why I say this is clearly this zone had acted multiple times as a zone of resistance. And the selling, whatever happened here, post that there was strong gap downs. And after this range was never tested again. So it will be very, very interesting to see how markets behave at 11,600 resistances. So use 11,600 as your resistance going forward. From a minute time frame, from an intraday Monday, Tuesday perspective, your channel border top, which is close to 11,400 and a little lower, should act as your short-term support. And suppose from the daily time frame, if I take you back to the daily chart, then it's very important that this 3-day bounce back, the majority of the move we have found yesterday, which was Thursday. So Thursday's low acts as a very important level of 11,300, 330, which we had a very tiny gap also. So use 400 as your short-term Monday support. Use 300 as an important level for the week's support. But I feel that the index will inch further up towards 11,600 before any meaningful selling. Before I take up the sectors, let me take you quickly to global markets watch list, where I have the Singapore Nifty plotted. This is one reason why I shifted to trading view to analyze our evening session, the stocks and the sectors, because I can quickly show you the live SGX chart also. So this was today's session and this will be counted as Mondays, and right now it's more or less flat. It's just down 16 points. So nothing much to take away from the SGX right now. Dow Jones is up 173 points, 171 points, flattish. This has broken below the river, and if you zoom in closely, the lows of 27,445, this is Dow Jones daily. It's very, very important, a breakdown of which can lead to serious weakness. This is S&P 500, which is flat. It's around 12 points. So it seems like Dow Jones is going to, or the US markets is trying a flattish close for the day. Now, quickly, let's go to the sectors. I'm here on stockcharts.com. If you remember, we look at the RRG charts. Let's first quickly take a look at the RRG charts, and I'll go to this view, which I have it here. I've created recently. Let's make it 1 week. Let's make it 1 week. Let's fit it out, and let's sort in terms of percentage changes. Okay, it's showing S&P. Let's make it Nifty. Update 1 week. There you go. So in terms of gainers, we have the energy. You know why energy? Because it was a huge breakout from Reliance Industries. We have IT. We've been talking about IT. We're talking about TCS. We're talking about Infosys. That this is one pocket of strength. It played out. That's one good thing. FMCG was lagging, but this guy proved to post some positivity this week. Commodities flat. Pharma also gained a little bit, not much. Consumer durables. What about the losers? Metals. Now this is where the RRG or any kind of sectoral rotation will kind of try to confuse you. You'll see that, come on, metals was in the leading sector. Metals was for the last 4-5 weeks in the leading sector. But then if you notice, how come then the metals is the worst hit? It does not mean that if it's a leader that it cannot fall. A leader essentially, then we have to check with the price chart whether it's extremely overbought or it's ripe for a fall or not. Metals has essentially done that. Then what's the point of this RRG thing? The point of this RRG thing is now we have a sector, metals, which is a leading sector, which is now correcting. A leading sector, when it corrects, it's an opportunity to buy on a dip. So make this distinction very clear in your mind if you're looking at sectoral rotation, that just because it's in the leading quadrant or a improving quadrant does not mean it cannot fall. Just because it's in a lagging quadrant does not mean it cannot rise. Price decides these quadrants. Okay. So coming back to the sense of these things, one thing that we can take out very clearly, the strength of IT. It was a leading sector, and it has continued to show that leadership. Metals was a leading sector, but it has fallen significantly. So metals should be looked next week or the week forward as buy on a dip. Remember this. Now coming to the volatile part of the market, the banks, the real estate, the financial services, they are all in the improving sector. They're all in the improving sector means they are not outperformers. They're trying to be outperformers. So they will be the volatile ones. They will rise with the fall, with the rise in the market, and they will also fall with the fall in market. That's exactly what we have seen. Another leading sector which reacted down a little bit is auto. And within auto, it's the two-wheelers of the Bajaj, the Hero, and the TVS, which we have spoken about multiple times this week. Looks very interesting. And then we have the small caps. Media, forget it, it's Z and PVR. We don't talk about media much. And that's the mid cap. The takeaway for us will be that auto is a relatively stronger sector. Media, let's not talk about it. So auto, IT, and metal. These three, if I sort in terms of the tail now, there you go. IT, small cap, auto, metal, media, and mid cap. These are my, let's bring in some length to the tail. Let's bring in around 10 weeks. Okay, now IT bouncing back from weakening to leading, small cap going from improving to leading, auto same story, metal same story, media same story, and mid cap also. These are my leading sectors, out of which we saw this week auto and metals were the biggest losers. Swing long traders, keep auto and metals in your list. Breakout traders, keep IT in your list. Number one. Number two, let's come to improving. PSU banks losing momentum, realty gaining momentum, bank nifty flattish, private banks is all right, financial services. These are improving. An improving sector, let me draw this for you, will either do this or do this. Either it will lose momentum and gain back the momentum. That's exactly what they are doing now, going up with the market and falling with the market. And when the market stalls, when the market falls or the market comes down and still the banks go up, that is when they will move to the right. This is bound to happen. This will happen. It's just when it happens. So having said this, we have to keep the banks and the financial services, and we have to continue to trade them. The rest, pharma, commodities, energy are kind of all right. We will look into the individual stocks to figure out which can be traded. Pharma can be an interesting one because it has the relative strength. Look at the positioning here. It has a lot of distance in terms of this quadrant. It does not have any value from this quadrant. So what happens generally in this case? It can do this or it can do this. The chances of doing this is also high because in that case, pharma will be a bounce back candidate. So pharma is also your bounce back candidate alongside auto and metal. So let's finish this RRG and let me take you to the sectoral charts. Auto, metals, and pharma stays as our buy on a dip, swing long candidate. Financial services and banking, both sides of the market. IT breakout candidate, this is my biggest strength. If it gives you an extreme reading on the top and it seems mature, don't trade it, let it come down a little. Now let's erase all of these, and from RRG let me take you to 10 per page. 10 per page will quickly allow me to talk about the sectors. Quickly, I have the three river system here. I have a bit of relative strength where I've plotted as Nifty as my denominator, this one. This is a 3-period RSI, which is going to give me short-term overbought, oversold conditions. This is RSI 14. This is more or less similar to RRG. This is a Tushar Chand indicator, the CTM. I'm working on this. It has some value, but I will not, comment on this so much because I'm just doing a bit of research on this. Now, quickly, Bank Nifty, uptrend because it's out of the river, comes inside the river, has started making small candles. RSI 3 is deeply oversold. Typical buy on a dip candidate. Keep a close watch. The banks can give us a bounce back next week. Auto, big strong uptrend, has entered the river. Look at the behavior of the river, the banks, and as well as the mainland. It's coming to a squeeze. It was a couple of days back a buying opportunity down here, and it has given a small bounce back. It can give us another attempt to go up further. However, if the current lows are broken, the 3-day bar lows are broken, then it slips back to a downtrend after a long time. So auto traders, as we say, buy on a dip is a candidate, but always use your stop losses because this can lead to a trend reversal. Commodity has given a trend reversal 4 days back down the river, bouncing back inside the river. Stay away from this space because this can be sell on a rise. Consumer durables at supports, very strong supports. Did bounce back for 3 days, kind of flattish. I don't have any setup whatsoever here, so I would like to stay away. Energy, primarily this move comes from Reliance Industries. It is very, very skewed. The behavior of this sector is highly skewed because of just one stock. Nevertheless, if you look at the broader picture, I will not be able to draw within the chart in stock charts, but if you look at the broader picture, the sector is not going anywhere. So primarily it is Reliance. Financial services, very, very similar to banking. Breakout comes within the river, oversold over here, down here. So it's a bounce back candidate. Banks and financial services. FMCG, very interesting. Why? You remember FMCG is a lagging indicator, is in the lagging zone in our RRG charts. And FMCG current lows with something like this. It had gone into a downtrend here, goes back, bounce back inside the river, falls again. This is the second attempt to go inside the river. If this fails and this low is broken, this is a turnaround, and it is already in a lagging zone. So a very make or break kind of a situation for FMCG. Be very careful if you buy, trade them. better not be for a medium to long term perspective. Make it a short term trade. It's not looking that great. It's kind of flattish, too negative. IT. Look at this, the behavior of the squeeze. Big breakout on the upside. Bollinger Bands are opening up. Strength over here. Mildly overbought, that this is RSI 3. It's a very short term indicator. Strength over here as well. It's a good sector. It's a well defined uptrend. It will continue to stay as a buy on a dip. Media, I'm going to skip it because primarily it's Z. Nifty metal, yes. Now we were in an uptrend, bounces back inside the river, bounce back number 1. Second fall takes it to a downtrend. Now this is going to be a little tricky for us. I feel, considering that the sector is oversold here in a short term and it has just broken the river, it will try and come to these levels. That is where these indicators will bounce because it has the strength in it. If it fails to sustain, it can go range bound to negative, but we have a short term bounce back in metals. I'm quite confident about it. So banks, financial service, and metals. Second page, pharma goes down to a downtrend, couple of 1.5 to 2 weeks back, bounces back. See, this is very repetitive in nature. Once you get a trend reversal, it always gives a bounce back inside the river, then it falls. Pharma is in a downtrend. This is the second bounce back. Similar story like FMCG. Once these lows are broken, pharma has also gone for a short to medium term perspective. So be careful on pharma. If you trade them, make it's a short term trade, not a very medium to long term. PSU banks, we've spoken about Bank Nifty and banks. Real estate, very, very similar to the behavior of Bank Nifty. These guys can also give us a bounce back, but I generally don't prefer to trade the real estate stocks. This is a small cap. This is the mid cap. Both of them are fairly strong. Last, I think this is private sector banks, very similar to Bank Nifty. So let's square it off. We've been for quite some time. Nifty, Bank Nifty, metals are the ones we'll be looking to buy on a dip next week. Coming forward, we're going to stay away from pharma and FMCG for some time. If we get any good opportunities, it will be short term in nature. We're not going to sit on it for a long period of time. As we spoke about metals, I would finish this conversation taking a quick look at the metal charts. Coal India in a downtrend, stay away. Hindalco uptrend moves into a downtrend. Every time we have seen a trend reversal, prices always generally tend to bounce back within the river. If I closely look at Hindalco, I think it has created a bullish harami pattern here, a bullish cross. So Hindalco, candidate for a bounce. Candidate for a bounce is Jindal Steel also, which is already bouncing back for 2 days. Hindalco is a better one. JSW Steel has not given a trend reversal. It is completely range bound. It is still holding on to the uptrend. This is a breakout candidate within the metals. This is a breakout candidate within the metals. Highly possible. Do not underestimate the trend of the strength of the trend. National Aluminium, similarly, it has gone below the river. It will come inside the river for a swing shot, but before that, we can get a bounce back. NMDC, same story. I think I see a bullish harami over here also in NMDC, just like we saw in Hindalco. Steel Authority, bullish harami again here also. So these kind of patterns is very likely to play out. And the big one, Tata Steel, downtrend. The issue with Tata Steel is creating long bars. I think Monday, Tuesday, Wednesday, or was it Tuesday, Wednesday, Thursday? Very long bars, very difficult to enter and keep a stop loss because it's very, very wide. Vedanta is already moving. It's towards the up. It's a breakout candidate, but it's already moved a bit. My short-term indicators are overbought. So taking away from metals, I would keep an eye on Nalco, Hindalco, SAIL, NMDC, JSW. Yeah, that's it. All right. I hope this was interesting. I think I took a little bit more time today. Nevertheless, thanks a lot for listening out to me. If you have any suggestions, feel free to ask me. Now, straight away, let's go to your doubts and questions and the trades that you have done this week.